currency moves are telling us is that the domination of the U.S. dollar is dwindling. Going back about 2 decades, the amount of commerce on a global basis was about 78% based U.S. dollar. Today it's 58%. So what's taking up the difference? Obviously other currencies. With the BRICS coming more and more into vogue, you're seeing the dollar bypass. In other words, many BRICS nations do commerce currency to currency, circumventing the dollar altogether. I think that trend is going to continue. So what it tells us is that most of the world is probably tired of the U.S. dollar dominance. They probably look at it in several ways, but I think the main theme is that the system really isn't set up fairly for other nation states. First part of the question is that more and more gold is being bought to be not an adversary, but a very solid asset-backed, perhaps, system. Now, whether we're going to go back into a gold standard or a pseudo-gold standard or not remains to be determined. But what I do know is with what happened with the war efforts way back in the Ukraine situation, when the United States basically froze $300 billion from Russia, that set up something that alerted the rest of the world that I don't trust the U.S. If I don't adhere to their political motives, their political views, they may freeze our assets as well. So most central banks are moving more into gold to prevent that from happening because, as we all know, it's no one else's liability and it really can't be taken from you unless it's stored, let's say, in a jurisdiction you don't want it to be stored in. Same issue, currency intervention is more common, as I just said. Japan has spent decades suppressing interest rates, and higher rates threaten their government finances. So governments now intervene in the currencies because they can't allow disorderly moves. They want to keep the system percolating along as long as possible. But governments are supporting currency. Central banks themselves continue to buy gold. And that tells us what I've already said. Many defend paper currencies publicly, while privately they're accumulating the one monetary asset with no counterparty risk.
So do you see this as a warning sign? Or would you still consider this kind of normal central bank maintenance?
I think it's even more than a warning sign. I think it's, as Rafi Farber says, who many of your viewers probably have heard that name, and it's the end game. All fiats fail. I don't think this fiat, the US dollar fiat, will fail in total like the Zimbabwe dollar or the Argentine peso or any of the currencies that we know were basically worthless. I think the dollar obviously still has value and relative in the Dixie, the DXY, the dollar index. The dollar is still king of the hill most of the time. But if you go back to 1913, the dollar is worth about 1.5 cents right now. So obviously it's failed in that 113 years or so, which means a new system is coming to the fore. And we're pretty much aware of that. So I think that's what we have to set our sights on is how much gold is being accumulated. Will gold be used in the next monetary system? If it is, how so? And if it is not, what will that system look?
Behind closed doors, central banks have essentially been voting with their vaults. In 2026, gold purchases hit a record pace, roughly 289 tons in the second quarter alone, with around $37 billion spent on gold in just the first 3 months of the year. The World Gold Council's latest survey found that 89% of reserve managers expect global gold holdings to keep climbing. Why gold specifically? It carries no counterparty risk, can't be frozen by a foreign government, and owes nothing to anyone. While officials keep publicly defending their paper currencies, their actual purchasing behavior tells a different story, one of quiet, structural accumulation.
Well, first of all, I don't want to play the fear card. Results happened gradually. So Bretton Woods wasn't done in one day. Nixon closed the gold window, did change everything. Basel III gradually changed gold's banking status. And since then, we've seen greater accumulation by the central banks. Then, of course, we have to look at CBDCs, central bank digital currencies. The Trump administration said, nope, we're not doing central bank digital currencies, which would have been very difficult in the United States anyway, because it would have to be enacted by Congress. It's a lot easier to say we're not going to do a CBDC and make sure that a private entity does it, which is exactly what it's set up to do. Bilateral trade outside the dollar continues, as I mentioned. So I would conclude with this. I think the reset has already begun, and most investors simply haven't recognized it because they expect fireworks instead of a very slow process that moves over time. Everything is based on a con game, the confidence in the dollar. And so who's losing confidence first? Well, if you go back, I would say 2 years, 2.5 years, I was talking about the run to gold. And the run to gold had begun, and final phase of the run to gold is an all-out sprint. Everyone is racing to get gold at almost any cost. That's usually how the precious metals peak. But 2.5 years ago, I said the run had begun because the central banks were buying gold hand over fist, but it was pretty much a stealth move unless you were a gold analyst or someone that was very familiar with international finance and how important gold plays a role in it. So most people didn't have any idea. But that's how it all begins. And then once the banks have accumulated enough, and they'll continue all the way through, then more and more people catch on, nation states, family offices, sovereign wealth funds, etc. So the point being is that the run to gold started quite some time ago, and it's only in the acceleration phase where the general public actually takes part or even understands that gold is accelerating. Many people that'll buy gold at the end really don't even know the basic reasons why. I mean, they'll have a vague idea. That'll be more of a herd mentality. Oh my goodness, the dollar's buying less groceries now than it did a week ago. I've got to do something. I'll buy gold, that type of thing.
History suggests monetary systems rarely collapse overnight. They erode gradually. Bretton Woods didn't fall apart in a single moment. Nixon closing the gold window in 1971 reshaped global finance in one stroke, but its full consequences played out over decades. Later, Basel III's banking reforms upgraded gold status on bank balance sheets, fueling even more institutional demand. Since 1913, the dollar has lost the overwhelming majority of its purchasing power. Meanwhile, central bank digital currencies have stalled out in the US amid political resistance, leaving room for private and alternative systems, and for bilateral, non-dollar trade to keep growing.
Simple explanation: it cannot default, no political liability, globally accepted, remains liquid no matter what. So gold checks every box for the ultimate money. As the late, great Jim Dines used to say, gold is the monetary hitching post of the universe. But silver's different. Silver's consumed. Its industrial base is about 60-65% of the total market. It's a much smaller market, and it's much more volatile than gold. Governments don't generally want monetary stability, so silver would be less stable. Industry absolutely requires silver, and investors like it for the added leverage. But the real problem with silver is that once it was demonetized officially in 1873, banks no longer held it as a monetary asset, although that's semi-true because 90% silver coins circulated in the United States as currency or money up until and inclusive into 1964. But for banks to use silver as a monetary asset, they'd have to admit its true value. For silver to actually work in a monetary system, its unit value compared to gold would have to be a reasonable gold to silver ratio, which at a minimum would be about 15 or 16 to 1, what I call the classic or monetary ratio. That's been historically the ratio over the most period of time because it's varied as set. That is a minimum. I think a 10 to 1 ratio, something like that. So for that to happen, banks would really have to admit that silver is valuable as money, and they're not going to do that. I don't really ever think you'll see silver officially used as a monetary asset. Although I got to be careful with my answer because India has already put silver back into, in quotation marks, a monetary asset. Because the people of India can use silver in any form, art or jewelry is my understanding, to borrow rupees upon. So they can use as collateral and they can get a loan on their silver. So that obviously has a monetary purpose. Will it come back more than India? Probably. Other nation states may do something similar. But as far as the banks, central banks saying, we like silver as a monetary asset, I just don't see that. Several things. One is there's more leverage in silver. Secondly, it's more affordable. Thirdly, if you play the gold-silver ratio, you can play that ratio and know when it's undervalued or overvalued relative to gold. And I think also the fact that we've been in a deficit for so long So I think the people that understand silver really look at it as a leveraged gold play. I think of it as in the context of an investor looking at the Dow Jones Industrial Average as perhaps your gold holdings and the NASDAQ as your silver holdings. The NASDAQ is probably going to give you greater leverage and more volatility, but higher potential gains than you have with the DJI. I think it's the same here. I also believe that silver will be used more and more in monetary transactions outside of officialdom. In other words, people may discount an apartment rent for silver. In other words, it might be $1,000 US, but if you give me $850 in silver, you get the same flat for that price for a discount. We see that more and more in farmers markets. I use silver at almost any farmer's market I attend, and I don't go to them often. They're only available here in the Northwest during the summer months. But some people don't want anything to do with it, but many do. So I think there's a monetary aspect you can't get around. The word silver and the word money is the exact same word in all the Romance languages. So people that tell me silver isn't money, I sort of laugh. I take it all in stride. I mean, you can tell me whatever your opinion is, that's fine. But for me to go into Mexico and say, plata no es plata, silver isn't money, or silver money isn't money, they wouldn't know what I'm talking about. It'd be very hard to convey to them why silver isn't money, because that's the word for money in that language. So most of the world, I think, outside of North America, values silver as a monetary asset. Not all. I mean, there's very little silver in Japan and some of the Asian countries. So I don't want to overstate the case, but it's a subtle case. But since it's such a small market, it doesn't take much monetary demand to really move the needle. People that are paid members, our premium service, the first thing they're supposed to do, and most do, is read How to Use the Morgan Report. And the first thing I address in that How to Use the Morgan Report is physical metal. And you know I don't deal in metal, but I have always advocated that you start a precious metals portfolio with precious metals. And in that guidance, I say the older you are, the more you should favor gold. The younger you are, the more aggressive you are, the more you can favor silver. And there's a reason for that, and that's stability, and also the volatility problem or issue. So this is why I advocate for people that are 60, 70, pushing into the high 70s, not gold only, but their exposure to silver should be muted rather substantially versus what it might have been when they were in their 30s. So this is just general guidance. I have many members that are still big silver advocates and probably are overweighted silver versus gold. But I think the general rule that I just outlined really, really holds and provides more peace of mind. I mean, when the big hits come to the downside, gold gets hit maybe 30%, whereas silver gets hit 50%. That's a big hit. And so I still advocate both. But let's say someone's 65, retired, I would say maybe 10% guidance, because I still think silver as a monetary asset is a viable worst case scenario. I don't think you're ever going to have to take constitutional silver and go down to your gas station and buy gasoline with a silver quarter. But on the other hand, I can't rule it out entirely. So I think you see I'm trying to be objective and sincere without being alarmist, but nonetheless, even without that kind of a scenario, I mean, again, going to the farmer's market, I mean, maybe if you make a good rapport with a local rancher and you can buy beef at a discount with using silver, or they just prefer to get silver or whatever. So there are uses for it monetarily, but obviously it's mainstream. Right now, no part of the market is actually tight, but to give the bigger picture, if we go back until, September, October, November, December of 2025, we definitely had a huge demand for commercial bars. And that was industrial use, primarily from China. And it wasn't all industrial use, but I'd say the lion's share was, and some was obviously monetary demand. And I think in those 4 or 5 months, we actually saw a true price discovery in the silver market, which we haven't seen for a very long time. And then, of course, the paper paradigm took over. I warned a lot of people, both privately and publicly. Privately, I gave an outline to sell into the $100 move. Many of my premium members took advantage of that. And, looking back, I'm not saying that's the ultimate top. I don't think it is, Kendall. but I do think that it is nice to sit there and, looking at, $60 silver today or 62 and having sold at 100, you could buy back some of it, and have another go at it. So go ahead and pulse me again if you want to dig a little deeper. I just think that the reason you'd still be bullish silver is that it's in a continued deficit. It's got like a stock buyback program. 60% of the market is there almost forever, meaning the industrial demand doesn't really ebb and flow very much, maybe 1% or so based on economic conditions. It's a byproduct metal 70% of the time, so if there's a huge run in silver, you can't turn up a mine supply. It comes from copper 25% of the time, lead zinc 35% of the time, and even gold presents 12% of the silver market. The other thing is, what does the future hold? And any high-tech society requires a silver. It's essential. There's basically no substitutions, and they're always trying. And will there be some? Certainly. But right now, like graphene, for example, does some conductivity similar to silver, but it's not economically as viable as silver is. So think in the long run, if you look at what asset class would be used going forward for multiple purposes, money and industry, it's silver. So you got to look at what the AI centers are doing. And beyond that, something that very few talk about, and that's robotics. I think if robotics go the way that it's stated by Elon Musk and others, and we don't know, that's a statement of the future, but nonetheless, that is another whole area of silver use that really hasn't started in a big way yet.
Silver sits in a strange middle ground, part money, part industrial commodity. Roughly 60 to 65% of demand now comes from manufacturing, especially electronics, solar panels, and increasingly AI infrastructure and robotics, leaving little room for substitutes like graphene. About 70% of silver is only mined as a byproduct of copper, lead, and zinc extraction, which means supply can't easily ramp up even when prices surge. Officially demonetized back in 1873, silver still functions as money in daily life across much of the world. The words for silver and money are identical in Spanish, Portuguese, and other Romance languages.
Well, I think it's important to understand what money is versus currency. And, without getting a big debate with anyone, I offer it. People say, no, I don't want it. And I've had that happen more than once, of course. I drop the topic, really. But someone that's interested, I give the very simple idea that, a quarter is what I used to pay for a gallon of gas when I was 16 years old and started to drive. And that same quarter today is worth about $10 in fiat, so I can buy more than a gallon of gas with that. So long-term savings should be in money that preserves purchasing power. Doesn't necessarily make you rich, although at times it can if it really gets a run going. But that the idea is the cold hard cash that everyone thinks is, conservative melts away over time. And silver and gold don't. Yes, they ebb and flow, and yes, you could buy silver at, $80 and watch it at 60 today and be very upset with yourself. But nonetheless, in the long term, silver and gold both preserve purchasing power. So that's the main thing, is that I'm paying you in actually something of value, whereas this paper paradigm, certainly it has value if you take it to Starbucks, but over the long term, as I said earlier, all fiat fails. So, and that's it. I really do try to keep it simple. And if people want it, the local rancher that I deal with at the farmer's market, they know who I am now after years. So they're kind of happy to see me. I'd like to direct them to my Substack. I'm not even sure how to get there. I'm sure it's linked.
We can put it in the description.
Yeah, we will. But there's it went by Farmer Fred. He's been a member for years. And he wrote a great missive on how cold hard cash melts away, and it's much better than the one I've come up with. So I'll get it to you, and people can read it. It's probably a 3-minute read, but it's profound the way he describes it. Really a consortium. In fact, there was one that was out in the public view. It's called the Silver Users Association. Now, they've been disbound, but the SUA, Silver Users Association, was basically all the great silver users. At the time, You're probably old enough to know, but Kodak, which, silver's used in photography a great deal, those days are long gone, peaked in 1999, so that was 27 years ago. Regardless, Tiffany's, Dow Chemical, DuPont, 3M, a lot of these big conglomerates that use silver want the price to stay low. They want the best margins they can have. So they really stress that silver is an industrial commodity only. It should cost something along the cost of production. And silver for a very long time, gold as well, have only sold around the cost of production. Well, gold's at $1,000 an ounce, going back into history. I mean, this bull market started in the year 2000 at $250 an ounce gold. It went up fourfold to $1,000 an ounce, but the time it was $1,000 an ounce, I was asked on one of the major TV networks to say that we were in a bubble in gold, which I refused to do. Mm-hmm. But nonetheless, the cost of production at the time was like $800. And then when we got to, $1,600 gold, the cost of production was approximately that amount. Now that we're at, $4,000 gold, the cost of production is half of that or better. In other words, huge margins now. Mm-hmm. But you don't see that in the precious metals that often, which you can draw your own conclusion. Mine is that it's going to be reestablished, or either is reestablished directly by government or indirectly by the people as a true monetary asset. It doesn't have to be established by the government officially for it to become the money of the people. The people, especially at the end of these great inflations, will flock to whatever works. That's why the cryptocurrency market is so strong, because the young people that don't really, in my opinion, understand the true sound money thesis are very happy to have a computer database that's holding quote unquote value.